Welcome to Tech Talk Tuesday. I'm your host, Carla, and with me today is my fellow co-host and CMT, David Blake. It's Monday, June 10th, 2024, and we have some activity to talk about that happened in the stock market last week, along with some interesting things to look out going forward. We do it mostly from a technical perspective. David, I hope that you had a great weekend. How are you doing
Yeah,
today?
had a good time. Thank
All
you.
right. Great. Well, let's get started by taking a look at last week's market activity.
All right. Well, we had a positive week last week. That was, I believe, that's the sixth out of the last 7 weeks we've had for the S&P 500 and Nasdaq that they've been up. But it wasn't exactly a just a smooth ride up. We had some mixed jobs data that kind of riled investors and pushed yields around during the period. We had a 3-year low in JOLTS, job openings for May. That kind of shook things up a little bit and moved rates lower. And then we had a weaker than expected ADP private payroll report that also pushed the yields down. They were back to, I believe, where they were around in March. So that was something that was helping the equities move higher. And then finally on Friday, we were looking for about 190,000 jobs. The Labor Department reported 272 or something. Yeah, 272,000 new jobs, and that caused the market to sell off Friday morning, and rates also jumped back up. Now, there's a couple of things about that need to be just mentioned. There were a couple of things underneath the headline on that government job report that it caused the market to rally back in the afternoon. For one, we had most of the jobs created were government jobs, and that was, again, that's something that we don't necessarily really like to see. And the other part was that we had the unemployment rate move up from 3.9 to 4%. That was the highest that's been in a few years, and that was due to people dropping out of the workforce again. As the population gets a little bit older, that type of thing. And that was something that's, so you have a big jump in jobs, then you have the unemployment rate go up. So underneath the headline number, there was some unsettling numbers that had to be looked at. And that caused some of the money managers to come in and start buying that opening dip where the Dow was down triple digits. So today we're getting a little bit of a mixed read. We have a lot of important economic data coming out. But as far as going back to last week, real quick again, we did see technology as the strongest group. That was led by a 3.2% jump in the semiconductor index. They continue to be strong. Actually, the semiconductors are up 1% again today, and that's part of, again, led by NVIDIA. They did their 10-for-1 stock split. I think as we speak, the stock is trading about at $120, something like that. So continues to lead the market higher. We probably will get some additional moves on technology stocks later on today. I think Apple development conference starts today. That could give Apple a little bit of a boost as they explain what's going on with their AI plans going forward. But we also had gains last week in healthcare and communication services. And on the weak side, utilities, energy, and materials were the weak links. Energy was, first off, utilities have had a great run lately. So that's because we've mentioned a few times on this Tech Talk show that, their just demand for electricity is going through the roof with all these AI chips and stuff. They're going to need so much more power. So they have had a great run. I just think you may have had some profit taking in that. But then you also had weakness in energy. That was due to OPEC plus nations. They said they would start phasing out voluntary production cuts as early as October. They're holding back some of the countries several million barrels a day, and that was to try to keep the prices up. They let it kind of go off to the side. We're moving up now. I think part of that is because the White House is trying to replenish some of our supplies. They cut last year, and they took out something like 700 million barrels or something they released that bring the cost of gas down for the driving season. Now they've got to replenish that, and that's, I think, moving prices back up. But anyway, this week we go into kind of a busy week. We have, again, I mentioned that we have Apple's Development Conference starting out today. We'll get some information that could help move, kind of jumpstart Apple stock. It hasn't done much. I think it's only up 1% for the year compared to some of these other tech stocks. So it's been a little bit of a lagger. Then also starting tomorrow, we're going to get some earnings reports from some of the big tech bullies here. We have Oracle, I think, comes out tomorrow. And then we have chipmaker Broadcom. They report on Wednesday, and then Adobe on Thursday. So we could get some swings in the market. I think it's going to be more due on those reports to individual stocks. Tomorrow we have the FOMC meeting for June beginning to go out. We don't expect any change in rates. Federal funds rate is probably going to stay unchanged at that 5.25, 5.5 rate. But we will get a little bit of their dot plot. And it's interesting that as the jobs reports came out last week, we saw the probability of a September rate cut jumped as high as 70%. That was just up from 54% early in the week. But now with some data that came out on Friday, and then I think the Atlanta Fed said that they look for 2.7% GDP growth in the second quarter. That caused rates to tick up again today. That's causing Goldman Sachs to now project that we may not get the first rate cut until December. We'll see how the market reacts to that. We will get the Fed announcement on Wednesday afternoon at 2:00, and at 2:30, Fed Chair Powell do his press conference. He'll do he'll just kind of give us a better picture on whether they still think that September is alive, or whether they think that maybe we won't get any cuts this year. We'll see about that. And that'll be followed by the CPI, which also comes out, I believe, on Wednesday. Right now, they're looking for year over year the CPI to increase about 3.4%. That's where we were in April, so not much of a change. This inflation is proving pretty sticky at this timeline right now. We would like to see it maybe move down a little bit. You take out the core CPI, where we strip out food and energy prices. That's expected to rise 3.5%. So inflation is still a little bit sticky, and that's also. That is 0.1% less than April. So whether that's enough to move the market or yields, I doubt it's going to move much. Then that's going to be followed on Thursday by the PPI, which again will give us another update on inflation. We'll see how that comes in. I don't have the numbers of what they're expecting on that right in front of me, but if you read the daily commentary, I'll have something, what to expect on those numbers over the next couple of days.
Okay, and how is the technical condition of the market doing?
Technical condition of the market still looks pretty good. We did see some improvement in the technical indicators. MACD, which is a short-term trend gauge that we follow, crossed into bullish territory for most of the indexes. We did see the Dow Jones, it's kind of waffling right around its 50-day moving average. As rates ticked up last week, we did see the small cap Russell 2000. Remember, the small caps are more they're a little bit they struggle a little bit more with higher yields. This is the small caps, and that's because it's probably due to a slowing economy. We saw that the small cap Russell break through the 50. It bounced off and found support at its 100-day moving average, which is good. Let me see what it's doing right now as we speak here real quick. Yeah, they're about flat right now. Again, we saw this little bit of a uptick in rates this morning, and the Russell's just down about 3 points. Right now, we do have the NASDAQ higher again, led by semiconductors, but the Dow Jones is a little bit lower today, not much, so like 38 points or something like that, and that's due because the financials are a little bit weak today, and Visa and Goldman Sachs were weighing on the Dow. That's why it's negative.
And how is the underlying market breadth doing?
As far as underlying breadth goes, I mentioned it's mixed at best. The AD line, which we consider a leading indicator for the stock market, has been kind of, it's wavering sideways right in here right now, and even despite the fact that the market is moving higher, but we're not getting a confirmation from the AD lines. And then as far as new highs go versus new lows, that's also mixed. We had more new highs on the NYSE than lows, but we had more new lows on the Nasdaq than we did on the NYSE, and that's with I think the Nasdaq was up 2.5% last week. So when you have a move like that, you would like to see an expanding of the new highs. Instead, we're actually kind of getting the new lows expanding in the Nasdaq. On Friday, we had 166 new lows versus 77 new highs. So, we're in triple digits on that daily last week, and we would like to see a little improvement in that. That just when you have the numbers like that, where the new highs are less than the new lows, that just means that you have a narrowing rally, which we don't like to see. We'd like to see the rally broadening out.
Okay, so you mentioned that the AD line is the leading indicator to determine the future market direction. Can you explain why that is?
Yeah, the AD line is more so on the NYSE. The Nasdaq you take with a grain of salt, because they have a lot of stocks that I don't like to say, but they're garbage stocks in there. That's why there a lot of them are under $5 or under $8, and you don't have a lot of volume. It's just they don't seem to go up or really move anything. But the NYSE, if you follow that, that's a running total, and as long as if the running total is moving higher, that is giving you confirmation that more stocks are being bought than sold. We have more advancing than declining, and that's a bullish signal. Again, what generally we will see when the market's going up, you'll see the NYSE AD line moving higher. Historically, it seems to happen a little bit faster now, but historically, a lot of times you would start to see the NYSE advanced decline line begin to tick lower, anywhere from 2, 3, maybe 4 weeks before the market actually topped out. And that's something that we still watch. We call that negative divergence. When you hear us talking about positive and negative divergence, that's one of the big ones that we follow. And that is the fact that you look at the charts and you go, wow, the market's going higher, but there's more stocks declining than are advancing, and that's a negative divergence. And again, that's usually a sign that when you see that top out and it starts heading down for 2 or 3 weeks while the market's still going up, that a lot of times is a signal to technicians that the market has probably topped out on this cycle, and we're probably going to get susceptible to more weakness going forward. So that's why it's considered a leading indicator. On the opposite end, a lot of times when you're watching the market go down, if you start following that NYSE AD line, you'll start to see, we're going down, but this thing is starting to tick higher. That means that you're probably having the investment managers are starting to nibble away. They're starting to buy stocks. That means that the market is it's becoming an under accumulation at that point, and that's usually a precursor to the market itself moving higher. So that's one of the reasons why we consider that a leading indicator of the market direction.
And how are we looking for investor sentiment?
Investor sentiment, bulls kind of pulled back a little bit. A lot of that was due to retail bulls coming back. They dropped from 32. Let's see. Actually, that was the bears. The bears jumped to 32%, while the bulls were at 39%. The retail bears just a couple of months ago were at 23. So they're starting to get a little bit more bearish as we go into the summer. We also saw a drop in the National Association of Active Investment Managers from 94.5% down to 68.7. That's a big drop. But when you have a drop like that, I just wanted to mention that that could be for several reasons. It could be that perhaps because of the holiday, the Memorial Day holiday, just 10 days or so ago, that maybe you didn't have some managers report. There could be some things that's missing out of that report. So let's take a look at that this week to see what's going on with that. Maybe we see it jump back up, and it was, again, like I say, just a matter of some managers not reporting. But other than that, I think that the market looks okay in here. We could get some volatility due to the CPI, and PPI, and we could also get a little bit more volatility this week if we get if Chairman Powell comes out and decides that hey, if inflation's too sticky, we need to keep these rates up higher until the first of the year. That would probably cause some downward pressure on stocks, but I don't think he's going to do that. The closer we get to the election, probably the more bullish he's going to sound as far as able to cut rates. So at this stage, I think this week we probably have an upward bias for the market. We'll see how rates react to the CPI and PPI this week. And again, I think that we should be good. Our cycles in the CTI stays positive until probably mid-July. So I think we can, just hang on to what you got. I wouldn't be a real aggressive buyer in here, but I don't think there's any reason to be jumping out just because you think valuations are a little high. So stay with what you got, and let's just see what happens this week.
Okay, great. Well, that was extremely helpful. And last question that I have for you, David, do you have any upside or downside targets for the major indexes that we can keep an eye on this week?
Yeah, I do. We had with the, we talk about the FLDs every once in a while, and we just had a little bit of a rally here this last week. And on the S&P 500, as we crossed above that, I think that we have the potential to probably get up around 5,400 to 5,405. That would be another 50 points from here. That would be like another 400 points or so for the Dow, maybe 500 for the Dow, which would get it back. I don't see the Dow making a new high. I do think the S&P 500 can make a new high if it hits that 5,405. And for the NASDAQ, with it crossing the FLD here lately, I think the NASDAQ, right now we're at 17,189. I think the NASDAQ has potential on our targets here to possibly get as high as 1,900 with an outside shot of maybe 19.2. So I think the NASDAQ, we could see a little bit of they'll start ringing the bells calling for a summer rally, but I think the summer rally is going to fall short once we get into July. But I think we can probably have another couple of weeks here of a pretty good market, especially in the NASDAQ. They start to talk about, rates going, possibly moving down. And if we start, if we see the CPI or PPI start to, tick lower, and it will follow that. A lot of times I talk about the CME FedWatch group, what their projections are for rate cuts in September or November or December. If we get a little bit of a lower tick in inflation, what we're looking for, then perhaps we can, perhaps they'll start talking about a September rate cut again, and that'll cause rates to move down and stocks to rally. I think this going into the election, I think it's going to be, normally you have a pretty good market going into an election, but I think this year there's so much uncertainty and just so much negative vibes or whatever going around the two candidates that I think if we're probably going to see more weakness, and even our cycles look for a kind of a weak market going into the fall.
Okay, well, that is very helpful information, David. We are actually close to running out of time for this week, but is there anything else that you would like to add going forward?
No, again, it's kind of a good week for you to watch what happens especially on the inflation front. And as long as we don't get a tick higher in those numbers, if they stay the same, or maybe one or two of them tick a little bit lower, then I think I still have an upside bias for the market. And I think we can keep moving for the next couple of weeks up through the 4th of July holiday. I would keep a bullish bias.
Okay, well, that gives us plenty of things to keep an eye on this week. Well, David, thank you again for all the very helpful information. We do have to wrap up this week's Tech Talk Tuesday. We want to thank you to all of our listeners for tuning in, and we will catch you guys next week.